Wonderful morning, everyone. Let's quickly take a look at one very important question from venture capital. What are the various stages in venture capital? First is early stage financing, and second is later stage financing. So, early stage financing is categorized as seed capital in R&D projects, startups, and also second round financing. So, if we see what are the key terms that you should know in seed capital financing is. The R&D activities are required to be undertaken before a product is launched because a lot of time and investment is involved. So the efforts is also required as will be very high, and also external finance is required by the entrepreneur during this development because the cost will be very huge, and the financial risk increases progressively as the research phase moves into development phase. So the two key things first is with regarding to the R&D that you should reproduce for the seed capital, and also the external finance is often required. That is also fine, but still the cash term main thing is the financial risk increases progressively as the research. So going from stage 1 to stage 2, the financial risk gradually increases. That is what you specifically emphasize upon, because there are chances that project might fail as well, as a lot of things as given the current market scenario is bound to happen. So the next is startup, and next is second round financing. So the second round financing, the key thing is the time scale of investment is usually 3 to 7 years. That is very important. You need to dwell upon the focus areas wherever is required. Then next is later stage financing. Later stage financing, the various categories of development capital, expansion finance, buyouts, replacement capital, and turnarounds. The simplest shortcut is bet. So the entrepreneur is betting on this company. B for buyout, and E for expansion finance, and T for turnarounds. So venture capital is perceived low risk in ventures requiring financial for expansion purpose by growing through the big factory, large warehouse, etc. And the time frame for investment ranges from 1 to 3 years. In the previous the second round financing we saw 3 to 7 years. Here it is 1 to 3 years. That is how you should connect and recall. So these are the various stages of venture capital: early stage, later stage. The shortcut for later stage is bet, buyout, replacement capital, expansion finance, and turnarounds. And in case of early stage, it is seed capital and research, then startups and second round financing. Hope you all of you followed. Make full use of, quickly make notes of all the key terms. The financial risk increases from as you move from research to development phase, all those things, so that it comes to your mind in a flow in exam. So all that best once again.